been a very strong week. And for those of you who stayed steady as the VIX rose to 37 and very high levels, congratulations, because you saw the sharpest 3-day decline in the VIX ever following that hecticness of last week. On this channel, we were calling for continued bullishness, and I'm calling for continued bullishness now, and I'll get into that in a little bit. But at this level, after 5 days of just green and gains and a whole lot of money made, I'm going to start playing the downside with a small allocation of my portfolio that, if my bet pays off, will become a larger allocation of my portfolio. So let me reiterate again why I think the market is going to continue running, and then I'll get into that one play that I've got going on that I put on today. So, as has been the case for a very long time in this pandemic, savings rates are at near or at all-time highs. This is very good for when the economy reopens. And we're seeing that even the current economy is doing very well. The unemployment rate, yes, it's high, but it's dropped off significantly. In addition, lots of companies are not contracting. Obviously there are nail salons that are. We don't talk about nail salons when we're talking about the market. Companies in the market are beating earnings expectations at record levels. Typically, companies beat analyst expectations 65% of the time. Right now, it's a historic 85% of the time. And that's right now. That tells you that analysts have their expectations somewhat depressed. That is, forecasted in the stock price. So to see continued beating in that area, it tells me that current stock prices might be slightly depressed, believe it or not, at least in the future. I know it's hard to look at these multiples and say, wow, underpriced stock, but let's not forget, earnings have expanded, margins have expanded. In addition, all of this that I've just talked about is going to be multiplied by some sort of ratio, 1.05, let's call it. I don't know what that number is going to be. It's going to be 1 point something. Because why? Inflation. So inflation will continue to expand multiples, will continue to increase revenue and all these kinds of things, and that will just simply lead to higher stock prices. Now, that argument doesn't have anything to do with the real value of stocks. That's the nominal value of stocks. I believe the price in nominal terms of stocks will continue to go. As for if we get inflation, what's the actual effect on the real price of stocks? I can't tell you. We will have to see what happens. That's where the uncertainty in the economy remains and will continue to remain. So we'll see how that kind of thing develops. Now, as I said at the beginning of this video, we have seen a 5-day strong rally with a record decline in the VIX. It's possible that people are getting a little too short-term complacent and went from a mode of, stress with GameStop and other stocks and questioning the validity of the market in the back of their minds. They had gone from that to kind of just getting some sort of peace and a nice bull run. And it's possible that is a little too complacent. I'm open to that possibility. So I'm preparing to profit off of that possibility that people have gotten too complacent. People will go into the weekend, start questioning things, they'll be bored tomorrow if they, or really market people who are, happy to sell quick, which they always come on Mondays. And, not always, but, and I'm putting on some S&P, SPY put options, just a small allocation of my portfolio, like 1 to 3%, depending on how much you want to give this thing. I'm looking at February 16th strike, 386, and I did 385 because in my personal portfolio, not my client account, just cost reasons. So if there is a couple, 1 or 2, 3% pullback, which would not be out of the ordinary and probably be healthy after 5 days of green, let's not forget, I'll be protected. At the very least, I'll be protected. Don't plan on selling anything else. That's not what I'm advocating for. I'm advocating for a play to the downside because I think there is a possibility we get a quick pullback after 5 days of run. I just think that's natural. So I'm prepared for that natural occurrence to happen. And I think it's wise to do something similar. So Maybe next time because the market has closed. But maybe Monday I'm wrong and the market's up. And then, with some money you're willing to lose, this is really a bet. This is money you're willing to lose because it is an option. Put some money there, see what happens. That's how I'm approaching it. So, remaining bullish for the reasons stated, but doing a quick little play on the downside to offer myself some protection and still see some gains so I can remain long in those other positions and not get too concerned about my short-term performance. So, that's how I'm handling things. Until next time, peace out.